Well, hello. It's Market Roundup time. Joe with you here. It's the 13th of February, a Tuesday, and a fun Tuesday because we got a pretty good move in the markets. You guys know the drill. Let's talk about it. I'm going to break down the news of the day, which was a CPI number. I'm going to take a look at some of the charts and what we are left with, and as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
And the obvious thing was the CPI number and its impact that it had on the market. And what you're going to see is a pretty good sell-off across the board. It wasn't just one specific stock or one sector. This was an absolute, I'm going to call it a take profit button moment. These markets have been very strong for a very long time, coming out of a very strong some very strong economic data, actually going into a very strong 2024 with good earnings on a lot of the darling stocks. So hey, if there was a time to push the take profit button, it would have been today. What do I mean? Well, let's break it down. Hotter than expected CPI data creates a good round of selling. All majors and sectors participated in today's move lower, and I think that's the key takeaway from today. There wasn't anything weak about what happened. You guys need to kind of know that. A hotter than expected CPI number means that inflation isn't slowing because we are not slowing and the economy isn't slowing. These are strong things. Now, I think what the reaction was too is because the chance of a rate drop or cut is going to be almost gone when it comes to March's outlook. I mean, it's got to be off the table. We're too strong for a rate cut. So the markets took it for what they will, or was this just an excuse to sell? We're going to find out. One day is hard to tell, but keep that in mind for you guys out there that think this is the beginning of the end. It's not quite there. Let's get to our how we finished. A very strong sell-off nonetheless, but it didn't leave us, it didn't put us anywhere dire, and I'll get to the chart in a second. Dow, the S&P, and the Qs all down 1.35, 137. The Qs down 1.8%, and the Russell down the biggest at 4%. The most volatile stocks are in there, which to be expected. Oil, big move up, well, 1.1%, good move up, I should say, which is usually your flight to safety. The volatility index, folks, also jumped up a little bit, also reactionary. You get a lot of put options, or I should say activity in the option sector, which could pop that up, and then gold down 1.35%. The advanced decline line, 86% decliners. That tells you everything. We'll get to the sector heat map here in a second, but it was a general sell-off across the board. However, we still got 48% above 50-day moving average, 52% below. There isn't a whole lot of charts that quote-unquote broke down here. This was just a pullback and a very aggressive gapping pullback. Here's the chart. And overall, you can see that we do have a bunch of room to pull back. The first thing being this first support level here at about can we call it 480? I know it's not the straightest line, folks. I draw ugly ones, but there is a pretty good support level here that we are still pretty far away from. The 20-day moving average and the 50-day moving average are still sloped very aggressively. This is the volume that we finished at today, and based on the gap that we had down, you'd expect that volume to be a lot more. Now, sure, this could be the beginning of maybe a 2 or 3 day sell-off. We have no idea. This is just the first day, which makes it a very difficult day, but an easy day to not do anything. So this move to the downside actually did set a hammer candle. We did get a good close, and I thought that was pretty interesting that we had a little bit of a bullish move into the close. That does mean that maybe we can get a gap down tomorrow or some more selling. A couple things to focus on. I think the first thing is pretty obvious, and the one to focus on the most is going to be that 20-day moving average here, or this support level that we set pretty much middle of January. I know it's kind of a minor support level since we are so far extended above that rising 20-day moving average, but nonetheless, the percentage amounts and the dollar moves seemed pretty aggressive, but it's nothing more than what we saw a little while ago. This just happened to come associated with a pretty good economic piece of information. But it is just a pullback. It is just a one-day, pretty aggressive take profit button that has put us back to, has moved us lower. There are some levels to look at here. We've got this 4870 here. We do, once again, I'll draw it again. We got that let's call it 4800 here. We've got a 20-day moving average. We got a support level all the way back here at the 4700 level. I mean, it's just a pullback to this point, and it's only one day. I do expect it to at least consolidate or go a little bit lower. However, if we continue to stay strong as an economy, economically things are rolling pretty good, it could create another opportunity for people to get back in. So for now, guys, I'm just going to chalk it up to a take profit event, or an excuse. How's that? An excuse for traders to maybe hit that take profit button, especially coming out of some of those earnings that we saw. Some pretty strong earnings on some of those quote-unquote darling stocks, right? All right, so there's my soapbox, and I'm trying to kind of work people back. I have had a lot of emails about, oh geez, is this it? Is this it? Do I need to start shorting things? Counter trend? No, this is just one day. Now it is a good event. Take a look at the Qs. There's a pretty good volume there on the Qs here. You can see that it did pretty much the exact same thing. I'm totally fine with what's going on. I'm not too scared of it. I mean, that is a pretty good amount of volume, but it is one day. It is definitely above its 20-day. It also moved, it closed off of its low going into the end of the day. It's got a resistance level here. We got a support level there. We got another support level here. There's plenty of levels for this to get to before it even becomes anywhere near to being a bear trend or a bearish pattern, right? This could just be a pullback. Now, guys, let me use this since I zoomed all the way out. I'm taking this reference all the way back to where we actually found a bottom and moved higher at the end of October of last year, and it has been nothing but gangbusters ever since. Keep in mind, folks, the SPY finished up 22% for 2023. So to see a 1.35%, 1.37% pullback in a day isn't really screaming the end of the world. So let's try to keep this for what it is. Now, that being said, this also should help, because when I see that we had a heat map where everything actually participated, maybe Disney didn't, Eli Lilly didn't, they came out of good earnings events, still showing some strength. But even these bearish moves here, if you take a look at some of these charts, and it was very difficult for me to find some of the charts that have been strong that I'm ready to just go ahead and go bearish on. There's no reason to. None of them are breaking support levels. None of them are showing weakness or creating a bear trend. It's just a round of profit taking. So some of these that are all red out here that have been strong are still strong. We just got to wait a couple of days to see where this takes us. And when this pullback, I should say, or round of profit taking is settled. So I'm not going to go too deep into it. I've got my outlook, and it is the exact same. Look at that, +1 on the weekly. You could go 0 if you get a little bit worried because there's a gap to the downside. Fine. I'm keeping it as a +1 because this is what could be setting up for a beautiful bull pullback. Yeah, sure, it was a gap, but hey, if we can stay above that 20-day moving average, you guys could just squint down to see this little hammer candle that we set. Yeah, I don't know if that's going to hold. I imagine we go sideways, maybe slightly lower from here, maybe test some support levels, but it could be an opportunity to add to the bull side if we can stabilize and turn around. Keep in mind, guys, a strong CPI and inflation shows an active consumer and stability and a strong economy. We really don't get bear markets unless we are struggling economic-wise, and I just don't see that. I kept it as a +3. Could I have moved it to a +2 or a +1? No, because we are above upward sloping 20 and upward sloping 50. Even though the price action has dropped a little bit, we are still above support levels, which would be this guy right up here, this most recent one that we set the end of January. So I'm going to stay with the same outlook. Also, it is difficult for me to find trades on super volatile gapping up days, gapping down days, large volume, big percentages. It hurts. And what I mean by it hurts, and I've got the end slide to add to that, is if you're trying to add bears right now, you're going to pay way too much for them based on the volatility. You saw that the VIX has spiked up over almost 2%, I think, today. or it went up to 16. So you're going to pay too much for your bears. If you cut your bulls, chances are you're cutting them when they're falling apart. It's just not a good day to do any sort of trading, reactionary wise, or to add to. Now that being said, I did find some potential bear trades that have always been bearish. Take a look down here. This is it's precious metals, it's energy, it's industrials, it's the stuff that has always been weak, and it's still weak. So if you want to get into one of those, I'm totally fine with that because they are continuing to stay and continue to be bearish. I did find one bull. I thought it was kind of fun. This is Southwest Airlines, right? Love, and I just thought it was cool. I like the pattern. Understand these markets fell apart and this thing didn't quite participate. It's staying up there. I do like the fact that it's up against its high that it set a little bit of a go. It did gap up and come back down. But look, this thing stabilized, and this is kind of what I feel about today's candle almost. You get a candle like this, and you get the volume associated with it, and the first thing you're thinking is, uh-oh, I'm out. This is it. That's it. That's the top. It's over. It's going to fall apart. Well, it didn't. It came back. It stabilized nicely to support level, and it moved higher. So will the overall markets do this? They absolutely could. But until they break a support level or until they fall apart and we see things change, we can't address it as anything but a super volatile event that, once again, I'll say it for the 10th time, I think it's just a round of profit taking. I could change my mind tomorrow since I'll be with you guys tomorrow doing the next wrap up. But we'll see. We'll see what tomorrow and the next or the rest of this week brings. Anyways, back to this chart. I do like it. I like it. I think it's going to high base up here. You could do something sideways to up. Don't be afraid of doing credit spreads here. You don't have to go full direction, right? Sometimes sideways to up is just as good. All right, so that's it for the bull. Now let's move straight down to our bear. You could have chose anyone that I had on the list. They're all going to be very similar. There's a couple that Corey went over yesterday and checked the Fridays room. All these lists that we've been carrying forward, folks, even though we don't show them each week or each day, they are still there and they're still feasible. This is one that I liked. I like Mosaic just for the price point, kind of sideways to slightly down. You can see that it is below its moving averages, showing some more weakness. Will this break down and go towards the 27 mark? Yes, sure, but you don't need to play it that way. You could play it as kind of a sideways to down on the credit side. Don't need to get too aggressive, especially if you expect that there might be a bounce coming in the next couple of days after this round of selling. So that's where I'm going to kind of leave it, guys. A big day of selling on the coattails of an uptick in inflationary data. And think about what this is. I'm going to jump down to the economic reports. The stronger CPI with a bearish reaction. The economy is still stable and strong overall. I truly think this was a reaction to a higher chance that the Fed can't cut rates. It's still too hot to do that. And I truly think it's just a reaction to the disappointment of some of the data saying that, okay, chances are cut are going to be, pretty low. We'll see. What do I know? So let's go back up to the market outlook. So was this an excuse to take profits or something more? I'm going to call it just a profit-taking day. It's too early to tell. We'll see. You give me 3 or 4 days when you see increasing volume. Maybe that volatility picks up. We see a lot of stuff selling. I see things break support levels. Okay, now we can sing a different song. But as of today, it's just a one-day event. It's a one-off event. Let's keep it there. Decision making on a day like this helps no one, bull or bear. As always, check potential trades, guys, when it comes to earnings. We are still in the midst of earnings season. I think we're going to be tapering off here soon. I think today's event just kind of shows you where the focus of the market is. So we'll see if there's going to be continuation of kind of lightening your load in some of these extended stocks, or if we stabilize here in the next little bit and it's another round of buying to come. Who knows? Fun day. Looking forward to talking to you guys next time. Bye, everybody.